Hello friends, welcome to yet another video in our series Finance and Investing Tidbits. Investors use price earnings ratio, PE ratio, as a very important measure of valuation of a company share. So the purpose of this video is to discuss whether low PE ratio, whether it's necessarily good and attractive proposition for investments. Welcome to the video. So PE ratio, price earnings ratio, is defined as the price, the prevailing price divided by earning per share. As I have already discussed in another video, this earning per share can be on historical basis, that is trailing basis, or it can be on a forward basis. In case it's historical, it's not so much relevant because what really matters is what is that the future holds, and that's why the forward PE is considered important. And I have already discussed these in the equity investing series of videos, including an example. So you may like to explore those videos, and I would share the links in the description box of this video. Now, low PE ratio means an investor is paying very less multiple of a company's earning per share. This is to say the obvious. So if the PE ratio is just 5, what it means is that the price is just 5 times of the earning per share, which is very, very attractive as compared to say a share which is trading at 18 PE. So let's get into a little more specifics. So if a company's earning per share is say rupees 10, a low PE ratio 5 would mean that the price prevailing is just about 50 rupees. Whereas for the same EPS, say of rupees 10, a high PE ratio 18 would mean the price is 180. So obviously, when you are paying only 50 rupees for the earning per share of 10 rupees is very attractive as compared to paying 180 rupees for the earning per share of the same amount, which is 10 rupees. So naturally, investors get tempted to a low PE ratio or low PE ratio share, hoping that it may become a multi-bagger someday. Now, if you are sure you have identified something that market hasn't, it is a great opportunity. There's no doubt about that. While that possibility exists very clearly, it is also quite possible that the earnings have been inflated or are not sustainable. When I say inflated, it means there is a certain manipulation that may have happened, and I'll share with you my own experience at the end of this video. Or those earnings may not be sustainable. So say on the trailing basis, PE ratio could be very attractive, but because the business is in decline, on a forward basis, the price may be too much. So we have to be careful in terms of how to use this data. And of course, I have taken examples in the other video that I have created on the same subject. So the market, there is also this possibility that the market is not trusting the reported earnings. And if that is the case, we have to be very, very careful. So just because the PE ratio is low, we should not straight away go and buy it, because it means that it will require a lot more diligence. When we are taking the responsibility of investing in that share, we have to do a lot of diligence in terms of going through their financial statements, trying to reach out to the potential customers, or if they're retail customers, then at least try and get a sense of what their business model is. I have, for example, even called up their customer service numbers just to get a feel of how good the service is and what is the depth of their offering and so on. So we can't just rush to buy just because the PE is low. So let me share my own experience with one company in this regard. So I had invested in a company which was a small cap, which was in security solutions business. So as I was mentioning earlier, I would reach out to their customer care centers just to check how diligent those people are, what kind of support which is being provided. That also gives you a sense of what is the market that they are catering to and what is the width of their customer base and so on. So I had got some reasonably good vibes there, but when I started looking at the financial statements, I started getting some doubts that they have kind of created offsetting imports and exports. So on one hand, they were showing import of some software, which they were showing as a part of their fixed assets. And on the other hand, they were also reporting some export earnings. And I suspected both of them, which were of offsetting numbers, in those days, about 12, 13 years ago, 50 crores each, I started getting doubts. And I attended their AGM, asked several questions in the AGM itself. The kind of responses I got clearly indicated to me that there were some issues. But if you had seen the PE ratio was consistently between 5 to 5.5. Very, very attractive, right? But the reality was that market, beyond we as individual investors, had some kind of a consensus, or they already had that awareness that there is something cooking in this company. So naturally, strong hands, people who are very knowledgeable investors, they were not never attracted to this counter. So money was never flowing in the direction of the share, and naturally the price remained very low. So it looked attractive, but one had to be very careful. And of course, I was in the early learning days there, as I had just started investing in 2006. And this I'm telling you a story of about 2009. So I attended the AGM, asked them questions, and actually all my doubts were confirmed that there was something going wrong there. And I came out of the AGM and sold off all the 8,000 shares I had at about 145 rupees. Thankfully, my purchase was lower at about 85. So I still made a reasonably good profit on that. After that, the share price went up, and then I was wondering whether I had made a mistake. But once I was convinced that they were questionable value proposition, there's no point in remaining invested. And my doubt really got confirmed when I recently checked a couple of years ago about what the share price is. And I found that the stock has been delisted many years ago at a price of about 36. Now that delisting is not because of buyback, but it is because of non-compliances, right? So it clearly tells us that just a low PE is not a summary reason to go and buy. Though I had bought it as an attractive stock or share, I realized later on that there were far more dimensions to it, and that's the reason why I have created this video. Thank you.